Okay, so as Kath said, I look after the accounting and audit area of CMS. I have been on a P&C, so I've got some experience of how challenging and how fun that can be. But what we're finding is more and more that committees are coming on who've been sort of told, look, it's just a matter of coming to a few meetings, handing out some ribbons at the end of the year. It's really not hard. And all of a sudden they find themselves responsible for running a business and managing staff. And some people come into that with some experience of that. I certainly did, but I found it really challenging when I took on that role as a treasurer. Other people come in with no experience of those things. So it's a tough gig sometimes. One of the things that will help you on that is this accounting manual, which is put out by Education Queensland with P&C Queensland's assistance. We use this as a guideline for all our clients, and it's an extremely valuable resource. So everybody should have a copy, and because I am a highlighting, tabbing person, you also all have highlighters and tabs. So whatever your preference is, feel free. The first thing I want to tell you is that obviously that this manual exists, and if you go and have a look towards the back of the manual on page 89, you'll find a heading there that says legislative requirements. On the fourth dot point down, it mentions the Financial Accountability Act, and it says that this accounting manual is part of the system of control, and the use of this accounting manual by associations is mandatory. So that's something that a lot of committees don't realise and don't always take seriously. You are required by the legislation under which you operate to apply the rules and regulations that are set out in this manual. Okay? So it's not an optional exercise, it's not a suggestion, it's a requirement. And when you sign off your financial statements, you're signing off that you've complied with the Financial Accountability Act. Okay? Having said that, it's actually a really useful guide. I use it frequently. I pull it out and reference it many, many times during audit season just to make sure that I'm, telling people the right things. There's a lot of information in here. We're not going to try and cover all of it today. I just want to highlight for you some of the things that I think are the most useful parts of it and the ones that I use the most frequently when I look after P&Cs. So really, something that's interesting is on page 5, and it's certainly something that I didn't know when I started as a treasurer. Down towards the bottom it says, under where it's got the little dot points, it says P&Cs cannot enter into contracts without the approval of the principal. So I never knew that. I signed all sorts of contracts without really understanding it. So the principal needs to be informed and they need to be given to give their approval before you do anything. Hopefully you've got a good enough relationship with the principal that you're talking to them about what you're doing anyway, and it's not coming as a surprise to anyone. All right? So that's the first thing I wanted to tell you. If you turn over the page to page 6, there's a heading there that says financial responsibilities. What this spells out is who's accountable for what, how the executive committee should be put together, and what their responsibilities are. It also talks about things like employees of the association may not be an office holder of the association. So if you're the ops manager or the OSH coordinator, you cannot be a member of the executive of the P&C. Okay? Something to keep in mind. It then goes on to talk about what the president must do, what the treasurer must do, what the principal's responsibilities are in that regard. And those are all really important to know and understand before you get too far into running a P&C. It also then goes on to talk about which records should be kept by the P&C and gives you record retention periods, which is very useful. A lot of people will ring us and say, look, how long do I have to keep all these receipt books? How long do I have to keep that? So on page 10, it actually tells you how long you have to keep everything. All right? Unless you were somewhere that flooded, because I've had a number of P&Cs who are arguing with staff, and unfortunately all the information for the P&C got washed away in the flood, which was really useful for a number of people and really awful for a number of other people. So think about where you're keeping it and make sure it's stored appropriately. Rats, mice, they'll get into cardboard boxes. So give it some thought. I won't talk too much about the next page, although I will go on to page 12, which talks about your operational responsibilities. This is a really useful guideline as to who should be doing what. It spells it out for you, what the president is responsible for, what the treasurer is responsible for. There are things on there you may not realise you had to do. It's well worth a read. It's also, yeah, sorry. Not at all, please ask away. Yep. Yes, an operations manager is an employee, yeah. And you as the P&C executive would set a job description for your operations manager that would cover their responsibility. The important thing to remember with the ops managers is because they're not a member of the executive, they can't authorise payments, they can't sign cheques, they can't sign contracts, they have none of those rights. You remain responsible. Same with the treasurer. If you've got a bookkeeper who's doing your work as the treasurer, it's still your responsibility to ensure that it's complete and accurate and timely. Absolutely, yeah. Okay. So those are some really useful pages. That'll give you some really good information about, you know, who needs to be doing what, and also a bit of a checklist to make sure you're not missing anything. There's a good section on planning and budgeting from page 16 on, and also talks a little bit about cash flow statement. So for those who don't know, cash flow is really what money do you think is going to be going in and out of your bank account during each month. And it's a really useful way of making sure that you're going to have enough money in the bank to pay, let's say, Christmas holiday leave. It's a really good management tool. But it's the old story, same with your budget, rubbish in, rubbish out. So try and be as accurate as you can, but there's some really good guidance in here about how to go about that and why you do it. Each P&C should have a budget for each financial year, and you should be reporting against it. Okay? There's also some good examples here of what a budget and what a cash flow looks like, how to monitor it, how to deal with it. All right? Now, you can do this manually, you can do it in Excel. If you use MyOb or Xero, they both have a function to put a budget into the, by month. You can actually put it in against your income and expense accounts and use that. So that's quite useful. And also, it's a good way of then just being able to print a report rather than having to rehandle information. You can print the report to take to your monthly meetings, and you've got it all sorted. The section starting on page 20 then goes on and explains about income, what the P&C's funds are to be used for, and that's quite important. That's often an area of contention, and we'll talk a little bit further on about spending money on things like gifts and you know, what the money's actually intended for, whether you can sort of support one student to go off on a great sporting adventure versus the money being used for the well-being of the whole school. So there's some guidance on that further on. But it does say, you know, the money is intended to be for the benefit of the school. And that's really important to keep in mind with everything we do, okay? It gives you some guidance talking about establishing bank accounts. It gives you guidance about subcommittees, which we'll talk a little bit more about later as well. Electronic banking, banking procedures. What I will say with regard to electronic banking is you still need to have 2 authorising people, and they must be members of the executive. So you cannot have your bookkeeper load payments and be one of your authorising people. It has to be 2 members of the executive, and they have to be given the paperwork that backs up that payment before you ask them to authorise it, okay? One of the most common causes of fraud is when somebody gets the passwords and usernames and so on of one member of the executive, and then they can generate invoices and pay them because nobody's checking what they're doing. The second authoriser just goes, okay, dunk, off. We've had one school where I think it was close to $200,000 got taken before anybody noticed. And it was only because a new bookshop convener came in that she was saying, what are all these extra invoices? The school was shut. So if you give people the opportunity, you know, some of them will help themselves. We've had 2, 3 of our clients or members have previous staff members jailed in this year alone for fraud. And there was a lady in Sydney I noticed in the paper who was 72 who has just been charged with stealing $150,000 from her not-for-profit organisation. So all shapes and sizes will help themselves if you give them the opportunity. That's why this guidance around banking procedures, about electronic banking, are really important. Okay, you've got to set it up and you've got to set it up properly. Keeping a cash book. So I guess if you're using a electronic accounting system, this information is less relevant. If you're doing it manually still, or if you're doing it in the Excel spreadsheet that EQ distribute, this is still important information. Okay, and it talks about credit cards, debit cards and FPOS on page 23. And it's interesting, something to note is that as per the departmental policy, merchant charges are to be met by the association as a cost of business and cannot be passed on to parents. So if you have an FPOS at your uniform shop, that's your cost. Okay? Something to think in mind. Third-party collection, I think, Robin, you could probably tell me on this a bit more, has changed a bit in terms of there are now approved bodies that are allowed to collect money like flexi schools and so on. Does that sort of predate that section?
Yes. The PNCs are only able to use, it's only reset in August, I suppose. The third-party collection agency is where you're getting someone else to collect the funds for you and then they send the money on to you. The department has done what we call an SOA, which is a standard offer arrangement. And there are 6 organisations on that list, and it's mandatory to use one of those 6 if you're operating in an online system. It is only to do with uniform shops, tuck shops, book shops and ticket ordering. So it's not an online fundraising. You can still not use a third party provider for that. The department has reviewed, I suppose, all of the 6 that are on that list. And off the top of my head, I can't tell you all of them. We'll probably have a go at most. We've got flexi schools here today. Commonwealth Bank has one.
One school?
One school. There's a 24 something or other. And one school shop online. Our online canteen.
Yeah.
So there's 6 of them.
Is Active Network, like if we have a spring club and they used an online system for ticket payment, is there Active Network? Is that information to this?
They're not able to use that. They must use one of those 6. And the reason is that the department has looked at all the security of those systems and all the requirements. Those 6 suppliers have met the requirements of the department around privacy and what they provide. So, so you have to use one of those 6 if you're doing any sort of collection of money by a third party.
And I won't name names, but I have had one of my members have their, thanks Robin, have their uniform supplier say, oh yes, no, we're approved by Education Queensland. Yeah, you can use our online ordering system. Yeah, no, they're not. So if you've got any questions about it, give PNC Queensland or us a call and we'll tell you whether they're on the list or not. Sorry. She's on the phone now. I think you'll find it's either on PNC Queensland or it'll be on the Education Queensland website. Yeah, if you like, we can find that link for you and email it out to everybody who's here today. Beck, could you make a note of that? Thanks, love. Okay, so that's something worth remembering. I didn't know that till last year. Okay, so if we keep just going through the pages, there's a very good daily takings breakdown statement to use as an example. There's a daily taking sheet example. So these are really good pro formas you can use to sort of put in place the appropriate paperwork. The daily taking sheet summary is actually one I used at our PNC for all our fundraising events as well, in terms of having a piece of paper that you are writing down the cash that you're collecting, having your second person count it and both of you signing it. So that's something your auditor should be asking you for is, you know, if you've put Father's Day income in the bank, have you got a cash count sheet that goes with it? You can obviously modify that. I found this one quite useful myself. There is a section on page 26 that talks about cash registers, the use of cash registers, what the procedures should be. When Jocelyn talks to you, she will tell you cash registers are the bee's knees and you should all have one in your tuck shops and canteens. If you decide to go down that path, there's guidance here on what you should be doing with them and how you should be reconciling them, which is quite important. Otherwise, they're not nearly as effective as a control. So if we flip over to page 31, there's a section here about the payments, and this is where the guidance exists about who can sign cheques, who cannot sign cheques. It also says that all accounts must be submitted for approval or ratification at a general meeting. So where you've made your payments during the month or whether you're going to make the payments, they need to be presented at the general meeting. And the advantage to that is that it's just getting more eyes on the payments, which is a really effective control. You know, if you know you're the person who organised for the air conditioning to be checked and you know you've only done it once a year, if you get a second invoice coming through for that, you know that there's something hinky going on, all right? So it's a really effective control to have the executive at a minimum, and preferably a couple of other people, looking at what's being paid out of the association's money, and that's a requirement, okay? It also talks on the subsequent payments about EFTs, user password, online security, and on page 34 it talks about petty cash, which is often a question I get as to whether or not they're allowed. It does say that if you feel you need one, the association may resolve at the annual general meeting to have a petty cash fund. What I see and what is really vulnerable to fraud is where the OSH, for example, the outside school hours care, is given a float of $1,500 for vacation care activities. You know, you should have accounts with those businesses. You tend to use the same businesses over and over. You should be setting up accounts with them and having an invoice come in that can be properly approved and properly paid. Cash is very vulnerable to theft and misuse. All right, so that's why it says if you're going to have petty cash, it's little, you know, it's $50 because you're one loaf of bread short and you need to run down and get it. That's what it's used for. All right. Page 37 talks about what your monthly and annual reporting requirements are. It's not an option to bring a financial report to every meeting, it's a requirement, and it's really important that you understand what's going on. You are running a business, you should be reviewing the financials at least monthly and preferably more often. There's a list here of what you would present at that meeting. If there are questions on it, the Treasurer should be ready and able to answer the questions on it. Another sign of either fraud or issues with the quality of your bookkeeping or account keeping is when you get told, oh, sorry, the accounts aren't ready. I haven't got them done yet. I'm waiting on information. You can get bank statements online now. You can have your financial statements ready within a couple of days at the end of the month. So if you are consistently being told that reports are not available or that they're not done, you have a problem that you need to address. It's a really big red flag. All right? It might just be as simple as the Treasurer is completely overwhelmed and needs some help. It might be that your bookkeeper doesn't really know what they're doing and so is just hoping no one will notice. Or it might be that someone's helping themselves to your money. Okay? You need to present those reports every month. Yes. Yep. No, you have to present bank reconciliation with the bank statements, and that should be signed by 2 members of the executive every month. Bank reconciliation is meaningless without the bank statement attached to it, because a bank reconciliation is literally a reconciliation between what your accounting module says you've got in the bank and what your bank says you've got in the bank. So one without the other is signed by 2 members of the executive. And again, that's meant to be a way of forcing you to have a look what's going on in your bank accounts. Okay? And that's the same if you've got subcommittees, swimming clubs in particular. They have to do the same thing. They need to come to your meeting every month with all that financial information as well. Subcommittee or not, they need to be presenting this. Okay? So that's quite a good list. It also gives you some guidance on your annual reporting and what needs to go to the auditor and what needs to be presented at your AGM from a financial point of view. If you don't have audited financial statements, you can't have your AGM. So you need to have your financial statements done and set your AGM at a reasonable time to make sure that the two will happen together. Okay? It does talk about here on page 39, it gives you a list of what the auditor will need to see. You'll probably find that your auditor should be asking for more than that. They should also be asking for the minutes of your meetings, executive and general. There's a lot of useful information about that. They might have other things they like to see. We like to see all your bank reconciliations. We'll also take a copy of whatever your electronic file is and we go through that. We'll look at your insurance and make sure you've got enough. Where that divide is. Look, the operations manager will usually be the person who's got control of the day-to-day paperwork. So it's their responsibility to make sure it's filed, that it's complete, that the report, if they're doing the bookkeeping for you, that the reports are ready for the monthly meetings. They will usually be the person who gathers up all the paperwork and sends it to the auditor. But in terms of responsibility for what's in that information, that rests with the executive, yeah. But from a practical, administrative, day-to-day, putting hands on pieces of paper and getting them, that can be done by your ops manager, yeah. They would, but the executive should be able to answer any question the ops manager can, yeah. And unfortunately, that's where you do get into trouble, is if you place too much reliance on your ops manager, you do find you can very quickly become disassociated from what's going on, and that can lead to problems down the road. And it also makes it very hard to hand over to a new committee. You guys, as the executive members, you're the ones signing off on the audited financial statements, saying that they're true, that they're complete, that that you've given the auditor everything he asked for. It's your signature that's there. So yeah, you always want to stay reasonably close. But yes, you can certainly let the ops manager do all the running around and, yeah. Yeah. Yep. Yep. Yes. There should be minutes for all your meetings, particularly executive ones, because often that's where decisions get made that can be the more contentious decisions. So you absolutely have to have minutes, and you have to make note of any decisions that are made, and then you take those decisions to the general meeting, the next general meeting, and say, look, this matter of urgency arose and this is how we dealt with it. Yeah. Okay. All right. Okay, so page 49. Let's get into the fun stuff, employees and tax. So employee entitlements. Now, the reason I wanted to highlight this, there is a lot of information in the preceding pages about subcommittees, which gives you guidance on, how to establish them, what their requirements are. The one thing I've been asked to absolutely highlight is, and I've got a page number which will give you some guidance on this while we're talking about subcommittees. Page 55. If you have an outside school hours care, you must have an outside school hours care subcommittee. Must. It says so in the book. That's something a lot of P&Cs don't realise. Okay? So that gives you some guidance there. But if we swing back to page 47 talks about subcommittees. The subcommittee has to act like a mini P&C. They still have to have financial records. They still have to keep minutes of their meetings. They still have to present their financial statements. The most troublesome ones I find are swimming clubs, because often a lot of the kids at the swimming club don't go to the school. It can be quite problematic. But if they operate as a swimming club under your P&C, you are responsible for them and they have to report to you in accordance with these guidelines, okay? And they will also be audited as part of your business. Page 47 talks about subcommittees. And page 48... the OSH, that's on page 55. Yeah. So where the association is the licensed provider of the school aged care service, the OSH service is to be established as a subcommittee, okay, and is required to report monthly to the association. The advantage of that is it gives you a few more eyes looking after it. OSH can be a really big business. It can be quite complicated. So it's support to the OSH coordinator, and it's also an advantage to the executive to have that extra lot of people in between the two of you. It's very useful. Not letting them lose sight of the fact that they still report to the executive of the P&C, because that can happen too sometimes. So is that okay? All good? All right, so page 49 then. There is a lot of talk about taxation and so on in the subsequent pages. But what I want to highlight to you is that at the top of page 49 it says employee entitlements. So the association must ensure provision is made for employee entitlements as they occur. This includes superannuation, long service leave, and must be recorded in the balance sheet as a provision. So what that means is, even if you have casual employees, they are still entitled to long service leave. If you have staff, we usually suggest that if you get staff who've been there 5 years, you start making a provision in the balance sheet for the dollar value of that, and you can start putting some money away, or earmarking some money. What's really important to note here as well is that superannuation has to be paid. It is not optional. You have to calculate it when you pay your employees, and you have to pay it by the due date. Okay, now whether you pay that monthly or quarterly, there are specified dates. If you have more than 20 employees, you now need to use what's called SuperStream, which is an online lodgement and payment process. It's actually quite good once you set it up. If you need any more information about that, talk to me later, because you've got some options. So from the 1st of July 2015, if you had 20 employees or more, you have to use SuperStream. From the 1st of July next year, regardless of the number of employees you have to use SuperStream. All right? So if you need some help with that, let me know, but that's a legislated requirement. It's also important to note that P&C associations don't pay income tax. So if your auditor is telling you don't do that because of income tax, you don't pay income tax. You are excluded specifically, all right? I had a client tell me the other day, I can't do that because the auditor said it would affect our income tax. Well, that's interesting. You've never paid income tax. Where do you think you're going to start? So just have that in the back of your mind. But don't lose sight. Generally for a P&C, with the exclusion of the OSH, you should be paying your staff all their annual leave at Christmas time. So by 31st of December, chances are you won't have any annual leave owing to any of your P&C employees. You should have a provision though for your OSH employees, because they don't have to take it all in December. That dollar value should be in your balance sheet at the end of the year, so everybody can see that there's a liability there that is going to have to be met in the future. Same with your long service leave. You have to provide for it. The number of committees who get caught out when, Mary Jo from the tuck shop who's been there 20 years resigns and suddenly they've got thousands of dollars worth of long service leave owing they didn't even know about. Casual employees are entitled to long service leave too. Don't forget that one. If you use an electronic system, my suggestion is you set up that calculation right from the start. Okay, some people say, but they might not stay. It's easier just to have it. It'll calculate it for you. Why wouldn't you do it? All right, and then there's no question about the hours that people worked and what their entitlements were. Okay. There's information in here about recording income, receiving goods. I'm not going to talk too much about tuck shops because Jocelyn will give you really good guidance on that. What I will point out to you is on page 52, the third heading down talks about stock takes. The guidance here is that you must complete a stock take every quarter, and the wording is to do with trading activities. So what you need to stock take is your uniform shop and your tuck shop. I would strongly urge you to do it every term. And the difference in the stock value, and I can talk to anyone who needs a bit more help about this, should be taken up into your financial statements, the movement in the stock value, if you're not using an inventory system, because otherwise you're not getting a good match between what you sold and what it cost you to sell it, so you've got incomplete information, okay? The other thing with a stock take is it's a really good way of identifying obsolete stock you can get rid of, the bread rolls down the bottom of the freezer that no one realised were there, you know, pull everything out, count it, put it back neatly. Do it every term. I would, you know, that's a really valuable exercise. There's guidance on here on how to do a stock take, and if anybody ever has any questions on that, I'm very happy to give you some guidance on that at a later date. What I have found with stock takes that I've been involved with is that the more volunteers you have, the better, but you kind of got to be a bit tough in don't all chat while you're doing it, because what we found was that all our cargo shorts and cargo pants got mixed up and we had to pull it all out and recount it. So, you know, you need a bit of professionalism about the whole process. Your convener will be all over tuck shop stuff, but your uniform shop is usually pretty big. You know. The other thing that somebody mentioned to me yesterday is just keeping in mind towards the end of the year for your tuck shops, and I'm sure you know all this, you know, you want to be running your stock down. You don't want to end up having very much at all to count for your tuck shop at the end of the year, or even at the end of the term. Okay? Is that in the new version? Because here it says quarterly. Yeah. It says here at least every quarter. Every term. Just do one every term, and if you can do one every month, even better. But for uniform shops, that's probably okay for tuck shops, but for uniform shops, that might be a bit harder. Brisbane State High only do theirs once a year, funnily enough. I said to them when I first did their audit, we've only got one stock take a year. And then I saw the value of their stock. It's like, yeah, no, once a year. It's a bit tricky, but they also have an extremely good inventory system they use. So page... Oh, that's over $500,000 worth of stock. Yeah. Most uniform shops, well, particularly in December, can have $50,000, $60,000 worth of... If you've got a reasonable size school, you can have 50 or... So you would probably have more than that. You might have $150,000 worth of stock at the end of the year. Yeah. What you need to make sure is if you have that big level of stock that you talk to P&C Queensland about upping your insurance over the Christmas holidays. Yeah, that's something to keep in mind. You can actually get insurance just for that period of time to cover additional stock. All right. And then, yes, your auditor should be asking for your last term stock take. They should be checking the costings that you're using. So when you do your stock take, you have to cost it from the latest invoices from that supplier. Cost, not selling price. It's the cost of the goods that goes in. Okay? Sounds obvious, but... So page 62 onwards talks about taxation. It talks about the Australian Taxation Office endorsements, which your association gets. So this talks about, you know, you can be a deductible gift recipient if you have a building fund, you are income tax exempt, you are a rebatable employer for fringe benefits and charitable institution for goods and services tax, which gives you some, you know, special rules for P&Cs that are designed to reduce the administrative workload. It goes on to talk about that a little bit more. Page 64 talks about GST topics. This is a really good section. If you want to talk to me about this later, I'm very happy to talk to you. It is a bit tricky. Oh yes, so the ACNC, yep. Now, Robin, that's kaput? No longer? Have they actually passed that now? No.
There's a fact sheet on our NCPC website PNCs have never been a good charity. They've never had good charity status. They are a not-for-profit under the Collections Act, and they have not-for-profit status with the ATO. And what happened was when, in 2013, when ACNC was regulated or came to be, any of the registered charities or not-for-profits, and that's their name, the Australian Commission for Charities and Not-for-Profits, were moved across to ACNC. However, they don't keep a list of not-for-profits, and under that new legislation, a statutory body can't be registered on their list. So what they have done is, or what they're currently doing, is going through a process of deregistering all PNCs from that list. A lot of PNCs use that status for applying for grants, and that's part of the fact sheet. Is it will still explain to the grant providers that you are a PNC under the Collections Act. You have not-for-profit status, so you are still eligible to apply for those grants. However, you won't be listed on the ATO site as a charity or having that status. So that will gradually go as they start. They started on the 1st of August. The other issue is around the schools that are registered for GST. We're still waiting for clarification as to whether that means that their income in fundraising will attract a GST cost. So we're still sort of unsure of that. If you're not registered for GST, there's no real change for you. You don't fill out a BAS. You have no real changes. If you are registered for GST, at this point there still is no change. You just won't be registered there, and eventually they will sort out whether there is a GST component or not. But the department is still looking at that, and CMS and myself are involved in those conversations.
Yeah. That fact sheet's good. I actually sent it on to a client and explains it all really, really well. So if you've got any questions about that, yeah, so that's why it's still in here. There's actually a new version of the accounting manual in draft, which will reflect those changes, but until they're bedded down, it's very hard to finish this. The GST, I'm not going to talk about now. Read through this. If you're completely baffled, that's fine. Give me a call and I'll explain it to you in small words and short sentences. I refer to this section frequently just to re-clarify in my head what the process is. But we do have, if you're not doing any GST, you don't have to have a BAS, for example. You can just have an instalment activity statement, which will include your PAYG tax that you're withholding from employees, and that's it. So if you're unsure about that, or you want a bit of a clarification on this section, let me know, because we could spend all day talking about it. Yeah. Won't reach that. No. Tends to be, if you have an outside school hours care, it can be worthwhile to be registered, even if your turnover hasn't hit the 150, because you can claim the cost for the outside school hours care, but you need to balance that with, what else might be going on in your P&C. Okay, so if you need any guidance about that, let me know. Page 79 talks about audits. Everybody's favourite thing. You have to have one. It's not an option. I had a school ring me the other day and say, what would you charge us to do 3 years worth of audits? Yeah, what? Come on, people, keep up. So you have to have an audit every year. It has to be presented at your AGM. The guideline here is obviously that if you can have somebody do it for free, that's fantastic. If you can't, make sure you get a quality accountant. The other thing I would say to you is that over and over again I find that people have a really good sense about their own P&Cs, and if the auditor is saying something to you that doesn't seem quite right, you have every right to query that. We don't always know your business as well as you do, and we might make assumptions that are incorrect. As Robin said to me earlier, you can give your auditor a copy of the accounting manual. It's not a bad idea. That gives them some information about what it is they're supposed to be doing and what you're supposed to be doing as well, because some auditors will audit you as if you were BHP, and that adds no value to anybody's life. So this talks about, who can do an audit, when the audit should be done. As I said to you, you've got to have it for your AGM. If you get a qualified audit, what that means is that they can't give you an opinion that says, yep, everything's hunky-dory. If you do get one of those and you're concerned, feel free to give me a call and I can walk you through what that report actually means. Some qualifications are red flags and some are, look, you just need to improve your procedures. All right, so if you're ever unsure about that, just give us a ring and we'll walk you through it. I'm conscious that we're running out of time. Page 86 then talks about ethical topics, and what I think is useful to highlight here is there's some guidance there and also a link in terms of the directive as to what gifts the P&C can accept, and that will include things like gift cards from suppliers and so on. Just get some guidance on that. The next section is giving, and this is one that does tend to come up in terms of, look, we've got this great treasurer, she's leaving, we want to take her out to dinner. Well, you can't actually use P&C funds for that, okay? The intention is that the money is raised for the benefit of the school, the kids in the school, the facilities of the school. That's where it should be spent, okay? So it goes on and talks about donations and student resource schemes and so on in there. And then closures of P&Cs and closures of schools and new schools. So they're the main things I wanted to highlight for you. I see I've made people yawn, so it must be time to wind it up and give you all a coffee. There's a glossary at the back that's also useful. It defines what a lot of the terminology means. If you're not sure, Robin or P&C Queensland can give you information, more guidance. We can certainly do the same, but this is a really valuable, resource, and I would really recommend that your bookkeeper have a copy of it, your executive has had a look at it, and that everybody's aware of its existence and the fact that it's legislatively required to be followed.
One of the commonest things we get is where there's been a tragedy in the community. There might have been a house fire or a death of a child at the school, and the P&C want to do something about that. They're not able to donate P&C funds towards that person or any individual, but individuals from the community, and usually it's set up through one of the other charitable organisations or a community group. They can register with Fair Trading as a promoter and set up a fundraising account, and the P&C can promote that. They can also take a personal collection, but you cannot take funds from the P&C for that person. You can't do a fundraiser in that way. So that's probably one of the most common ones that I get in, and particularly lately there's been quite a few. And we've got to say that it can be done, but it just isn't done through the P&C. Okay?
The old advice, if you're not sure, ask. Does anyone else have any questions? I'll be here until...
Can I ask about just the gifting? I see a lot where convenience are shopping at Woolworths and Coles and using their personal reward cards, and we're not allowed to personally benefit as employees.
Yeah.
Yeah, so that's another no-no.
Yeah.
Yeah, can't do flybys, that sort of thing. If your employee needs to be in.
Yes. Okay. The other thing too that Robin told me, which I'll just tell you because it's useful information, because people are starting to buy online a lot more with Coles and Woolworths. When the legislation doesn't allow you to have direct debits taken out of your bank account, as in Woolworths normally operate, as in you spend the money there and they help themselves to your bank account, you're actually not allowed to do that as a P&C. If you talk to Woolworths or Coles and tell them that legislatively you are not allowed to do that, they will send you a statement each month instead. Yeah. Yes. Yep. With a statement. Yeah. What the default is on those setup forms, though, is direct debit payments, and you're not allowed to do that. Yeah. 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 Go for it. Yeah. 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 So that's just another useful bit of information. Has anyone else got any questions? I'm going to be here for at least till lunchtime, so if you think of anything, please feel free to come and ask me then.